Good, Good afternoon. Welcome to Midcap Radar.
Okay.
So then I think it's
yes. So that's Reema Tendulkar, and with her is Sonal Bhutra. But we'll do one thing. We'll start the show with the top headlines. Market holds gains as stocks see a sharp surge after a lower than expected US inflation print spurs big risk on bets. IT leads the comeback, followed by metals and realty, while autos and energy lag.
GNFC dips as sales volumes decline and operating margin contracts sharply. The chemical segment delivers subdued realizations across the board. A stellar set with a near 600 basis points bump up in margin boosts fine organic.
Zomato surges the most in 3 months as losses narrow, and the new age player delivers a good operational performance despite a slowdown in growth.
Stocks of Nykaa and Policy Bazaar surge despite a selling overhang.
Okay, all right, those are the top headlines that we are tracking on Friday on Midcap Radar. So it's Friday afternoon, and while we have the Nifty, which is doing well, it has come off slightly from the day's high. So we have Nifty up around 300 points, but nothing to complain there. The mid-cap side of things, they have actually been subdued, so to say. So that index is absolutely flat, but with some negative bias right now at the day's low. So that particular segment is not doing so well. However, the advance decline ratio, they are in favor of advances. Banking index also, of course, the big moves that we are seeing in HDFC Bank, all of that is doing really well today. But Reema, generally, it's the global positivity that is rubbing on our markets as well.
Inflation cool, markets hot up, right? That's been the big theme across the global markets. But this is Midcap Radar, so let's get to our segment, Midcap Movers. Vivek is joining by to take us through the midcaps that are moving and shaking in trade.
Well, good afternoon. You know, it's a very good market as far as the broader end of the universe is concerned. Almost 49 out of the Nifty 500 stocks today have hit a fresh 52-week high, and a lot of the stocks continue to hold on to the gains even in the later half of the session. We're first looking at AkzoNobel, Aegis Logistics, and Craftsman Auto. After results, you know, these stocks have done quite well. JMC Projects today actually moving up with very strong volumes is on the back of the fact that Kalpataru Power has indicated that the merger is on track and likely to end by Q4 FY23. Now, some of the other stocks, you know, earlier we had highlighted, you know, the MSCI index inclusions, while the standard index inclusion stocks have seen a little bit of a cool-off or a reversal of pre-positioning that had already occurred. Now, some of the stocks that we are looking at today are the inclusions into the small cap index, and some of these stocks, 44 stocks included in the small cap index, but we are highlighting the ones, you know, that have moved very strongly in today's trading session. Apar Industries, Barbecue Nation, Data Patterns, and Hindustan Foods today locked at the upper circuit. On the other hand, you know, in fact, if you're talking about some of the names today that have hit a fresh 52-week low, Quest Corp continues its weakness, and also Supriya Life Sciences today continues its down move on very strong volumes.
Okay, all right, Vivek, thank you so much for joining us. Those are some movers in the broader markets. Let's do one thing. Let's continue our conversation about earnings. Nitin Spinners posted a weak set of Q2 earnings a while back. Company's revenue and profit were down year on year, while margins also contracted substantially. We have Mr. Dinesh Nolka, who is the managing director of the company, joining us now. Mr. Nolka, good afternoon. Thanks a lot for joining us. Well, you had indicated earlier that margins could be under pressure because of volatility that we are seeing in the cotton prices. That was about Q2. How are things panning out right now in terms of cotton prices, and have you been able to pass on those higher cotton prices to customers?
Good afternoon. First of all, cotton prices have started to come down with the new cotton season coming in from October 1st. Cotton prices from the peak of about 1,05,000 rupees a candy have come down to about 66,000 rupees a candy. So the major pain which was there that our cotton prices were much higher than the international prices. They were running at a premium of about 35 to 40%. Now that has substantially reduced. Now the differential is only about 15%. So that is a relief for the industry as a whole, and of course for us as well. So with this cotton prices coming down, I think we can see good demand from the international market as well. Of course, the European and US market is having their own set of problems, which is restricting their discretionary demands. So that is, of course, subject to that. We expect that definitely the coming quarters will be much better than what we had seen in the last quarter.
Mr. Nolka, afternoon. You have a big capex as well lined up. But you know, the global situation appears to be deteriorating a bit. Are you a bit worried about how exports will pan out going from here on? And if you could give us a sense how exports have been in Q2 as well as the outlook on that front.
Exports in the Q2 has been quite weak. Normally, we have been exporting about 65% of our revenues. The substantial reduction, what we have seen of about 23% contraction in the top line as well, is majorly due to exports. In this quarter, the exports was only 48%. Further, if you see on the absolute numbers, they were down by about 65%. So the exports are definitely down, and we are definitely expecting the major problem was, as I
Okay, Mr. Nolika, I think we have you on a scratchy line. We're not able to we're not able to hear you completely. So we'll just come back to you while we fix that. But of course, for Nitin Spinners, they have some positive commentary coming in where they are saying that yes, exports were impacted in the quarter gone by, in the first half as well, but export orders, they have started picking up. We also have cotton prices which have come down from the peak from levels of 1,05,000 rupees per candy. It has come down to 65,000 rupees per candy. But textiles in general, you know, Reema, today we were speaking to Deepak Nitrite as well, and they said specifically from the textile sector, demand is really low. This is something Rosari Biotech has also told us. So textile sector in general in the quarter gone by has not done so well, and that is something we saw in Nitin Spinner's numbers as well today.
Absolutely. I think we got an indication, right? So many of these large global textile majors, Walmart, Target, they all indicated that they are sitting on, you know, inventory which is not getting sold down. They will have to price it down in order to clear it before, you know, the festive season. And now clearly exports have been fairly weak, like for Nitin Spinners, as Dinesh Nolka was telling us, has declined by 65% on a year-on-year basis. So you were telling us that in Q2 exports were weak, but you are seeing some green shoots. Could you continue?
Yeah, as the cotton prices are coming down and we are becoming competitive, we should be able to do better. But of course, the problem still lies in the Europe, where we have cotton. Basically, the demand is very weak. They have the currency has depreciated substantially against US dollar. Of course, even against the Indian rupee, they have depreciated by about 8 to 10%. So that is causing a lot of concern. And US is actually, US have a lot of inventory pipelines. So they are trying to reduce, of course, their consumption has not come down, but they are reducing their inventories as well. So the demand from both these markets have been less. So but we are expecting that post this Christmas season, festive season, which is passing on at the moment, we should have a very good demand coming up because inventories, the pipelines are quite empty at this point of time. So export demand should pick up in the year FY23. And as far as our expansion goes, we are quite confident that by the time it will be on stream, things will normalize.
Okay, so things will normalize. So in that case, Mr. Nolka, you had earlier told us that, okay, revenue growth will not be as good as you saw in FY22, around 4 to 5%. But since exports, at least for Q3, also will not pick up the way that you've seen in last year, what kind of growth are you looking at right now? Will you stick with your 4 to 5% growth targets? And between the two markets, export and domestic, what is the revenue targets that you have this year?
Basically, revenue targets, we are trying to, since we are seeing domestic market is very good at the moment, demand is also pretty good. So we are trying to rationalize our exports and we are trying to do it 50-50. In the last quarter also, it was 48% exports and 50% was domestic market. So we'll continue with this strategy of 50-50. And as far as top line is concerned, it's a function of the prices and the volume. Of course, we had cut down some production during last quarter, but we are coming back to the normal production levels from Q3 onwards. So in Q4, we'll be running at full capacities. In Q3, we are ramping up the capacity to normalcy. So all in all, I would be happy if we will be able to maintain the same revenues as we had done last year.
What's the outlook on prices going ahead? I think you said currently it's at 60,000 a candy, which compares with over 1 lakh 6 months back.
It is 65,000.
65,000. And what are the futures quoting at? Just to get a sense that in the next 6 months, perhaps, do you anticipate a further decline in cotton prices? And what will it do to your margins?
Further, if you see the international futures and convert it with the Indian rupees, the futures are running at, which is at about 85, 86 cents, is at about 56,000 rupees a candle. So normally we have 5 to 7% premium to that for the various costs which is included for transportation and others. So still we have another 10% prices of raw materials can go down from here. Once the cotton arrivals peak up, and we are expecting good cotton crop this year. So we are expecting cotton prices to be in around 60,000. Coming to the margins, as the raw material prices goes down and we become internationally competitive, margins normally improves. So that is a function which normally happens when the raw materials are down.
Okay, all right, Mr. Nolka, it is always a pleasure speaking with you. Thank you so much for joining us. That's the word coming in from Nitin Spinners. Things were not so good in quarter 2, but looking up in quarter 3 and quarter 4, expect demand resumption in FY24 as well. Hindalco's numbers at the bottom of your screen. The stock is up 3% as we speak. Total EBITDA has come in lower than estimates, so 1347 crore rupees. This is including Utkal, which compares with a poll of 1800 crore rupees. And if we compare it on a YY basis and on a quarter-on-quarter basis, it has seen a decline as well. The stock still higher. The copper EBITDA has come in higher, and that could be the reason why the stock is staying afloat, up around 3%. So copper EBITDA at 544 crore rupees, which is higher than the CNBC-TV18 poll of 457 crore rupees. We'll do one thing. We'll slip into a short break now, but we'll get in more details on this and analysis as well for you. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, it's time to get in some more managements now. We have LT Foods, which is on our radar, the owner of Daawat brand Basmati rice. As Saudi Arabia, SALIC has acquired 9.2% stake in the company. The company has also entered into a strategic supply agreement with SALIC. To discuss all this, the earnings that the company reported some days back, we have Mr. Ashwini Kumar Arora, who's the MD and CEO of the company, joining us now. Mr. Arora, good afternoon. Thanks a lot for joining us. Well, before I ask you about the synergies and what outlook do you have with this particular deal that you've entered into, I just want to understand whether there are any more plans for promoters to pare down their stake, because in this deal itself, there is some selling by the promoter as well. Is this it for the stake sale to SALIC, or we can expect something more to happen here?
So we don't have the plan yet so we will be holding 51%. So we don't have the plan.
In the near term or the longer term, like there are no plans at all to sell any stake to any other player?
So not, near midterm, the plan is to, have the major shareholder
in the company. Okay.
Mr. Arora, afternoon. With this deal, what would be the contribution of Middle East going ahead? Currently, I believe it contributes 6% to your revenues. What could that number look like?
So this deal, we are very excited about this deal. So this deal will open, the doors for the Middle East market, which is comparatively weaker market for LT Foods. So this will be, both for organic and inorganic opportunity we will explore.
Okay, so what kind of growth, since you are getting higher exposure in this particular market, how is that market doing right now in terms of growth rates? Because we are talking about an impact in global demand, but this particular market for your kind of product portfolio, what kind of growth will come in from this market for you?
For example, Saudi Arabia is a 1 million ton, and as an LT Food, we are doing only roughly 20,000 ton. So we are expecting that we will have in a coming year 5 to 10% market share of that market.
Okay.
Okay, that's good to hear. What are you planning to do with the money that is coming in? Do you have plans to bring down your working capital debt?
So this money will be used for the growth of the company, to enable the growth. So immediately it will reduce some the borrowing, but in longer run will be used for growth. So as an LT Food, we are already on a very comfortable position as far as borrowings are concerned. Borrowings are all working capital borrowing, and we are maintaining debt EBITDA ratio less than 2.
Okay, so it will be used, some part of it for growth, some part of it for reduction of debt. Let's understand your strategic supply and cooperation agreement as well with SALIC, sir, here. What kind of quantity will be contracted through this agreement? It's for 10 years. What prices? Is it something which is equal to the market price here? And are price revisions allowed over the 10-year contract period that you have with SALIC here?
So this is a contract we have agreed that in case of the Saudi government bonds, we will supply them the rice, but not the prices are not yet finalized.
Okay, so but if you have not finalized the prices, but just in general, have you had discussions?
But this is the prices will be decided. Depends on the needs and the market position. It will be decided year on year.
Okay, so it can be revised basis what the market condition is in that particular agreement.
Yeah.
Okay.
Yeah.
You have also done one more thing, and that is increasing stake in Daawat Foods. What is your plan with this going forward? Now I understand it's a wholly owned subsidiary. You have been getting into packaged foods, and you have told us multiple number of times that not a rice company, but now you are more into the packaged foods category. What is the outlook in this particular segment, specifically with Daawat? What kind of growth rates are you expecting here?
First of all, we are proud to be, dealing in a specialty rice and basmati rice. But we are, all our business is consumer-facing business.
Yes.
So it's a FMCG business, and we are very proud of that. But we are extending to, we have 3 revenue streams. One is, we call it specialty basmati, another is organic food. And the third stream is the processed packaged, food. So that's the 3 revenue stream we have.
Okay. So last question before we let you go, Mr. Arora. This is a deal that you have entered into. So, of course, this revenue stream will start flowing in as well. Right now, if we look at the revenues this time around, they did well, but margins were under pressure in Q2. Can you give us a sense of how the pricing is, and going forward, what kind of margins are you looking at, considering that you have a considerable exposure to exports as well?
So margin were under pressure only because of the inflation and steamer freight. And going forward, we are expecting that the margin will improve once this freight market is settled and and inflation is under control. And somehow we will also looking forward to increase the price to the consumer.
Mr. Arora, we'll leave it to that. Thank you very much for joining in. That's Everything Foods talking about their deal with SALIC. With this, they're trying to tap into the Middle East opportunity. Currently, the Middle East opportunity stands at 1 million units. And LT Foods is looking to have a market share of 5 to 10%, which would mean 50,000 to 100,000 units, a considerable uptick from their current presence of 20,000 there. Get into a break. On the other side, we'll talk more about Hindalco, and eClerx is the stock which is on our radar.
Welcome back. Still tuned into Midcap Radar. Well, the markets are doing well, but one stock in the Nifty pack which continues to do well is Hindalco, actually. So no major surprises there. In fact, the copper EBITDA has come in better than what the street was working with. So this time around, copper EBITDA has come in at 544 crore rupees. This compares with the CNBC-TV18 poll of 475 crore rupees. It is an increase on a YOY basis, a slight decline on a quarter-on-quarter basis, but volumes as well have been higher. And that's the reason why the stock is at those higher levels, and it has not come off despite the fact that the total EBITDA is lower than estimates at 1347 crore rupees. And if we look at it, of course, it was expected to decline on a YOY and on a quarter-on-quarter basis. Even the aluminium EBITDA, that is decent. So the reason why the stock has not seen that sharp fall from the top, it is up around 3.5%. That's about Hindalco. Let's talk about our mid-cap spotlight segment. Reema, you're focusing on a stock that is doing well in the broader market, eClerx.
Yes, so the stock is up close to about 4%. Good numbers. Rupee revenue growth 3.8%. EBIT margins have expanded considerably. by more than 400 basis points to 23.7%, which compares with 19.2%, and that's driving a 27% increase in the company's profitability. In constant currency terms as well, the growth has been healthy, close to about 21% growth on a year-on-year basis. One of the reasons for the margin improvement is an increase in utilization, and secondly, the forex benefit. Because the rupee realization has gone up due to the depreciation, that's benefited their margin. Also, what's providing support is this buyback announcement, 300 crore tender buyback at a maximum price of 1,900 rupees per share, and the promoters have indicated they will participate in the buyback. But as we wrap up on the Midcap Radar, just want to leave you with the Midcap Index. So while the Nifty is still holding on to all its gains and it's up 1.5%, the Midcap Index is now in the red. So just pull up that intraday chart in the Midcap Index and you can see the steady slide in that. It slipped almost 1.5% from the high point of the day. So that is a bit of a concern. The exuberance that we had in the morning has not continued in the second half of the trading session. With that, out of time, as promised, your stocks when we return.